I'm Charlotte McLeod with the Investing News Network, and here today with me is Adrian Day, president of Adrian Day Asset Management. Thanks so much for joining me today.
Well, thank you, Charlotte. How are you?
I'm doing well, and we're here at the New Orleans Investment Conference. How's it been so far? What's your sense of the mood here?
Oh, I think the mood is pretty good. This show always gets a relatively small but a relatively sophisticated audience. So these are people who understand markets. We're not just talking gold and gold stocks. We're talking about a lot of markets. No, I think the mood is pretty good.
Yeah, there really is that more macro approach that we don't always see. And I found there's been a big emphasis here on the potential for a stock market crash. Can you tell me where you stand on that? Do you see that coming?
Yeah, I'm not sure I see a crash as imminent. Now, a lot of this might be event dependent, whether it's, elections or whether it's tariffs with China and how that resolves itself, because markets, no question, we're close to the end of a bull run, and the valuations in many sectors are very, very overblown. But the ingredients for a crash, I just don't think are here at the moment. When you think of a crash, you think 1997 or 2001 dot-com bubble, or the housing market, 2008, and the sort of signs of a mania just aren't here at the moment.
Okay. I found one of the comments you made in a panel the other day quite interesting, talking about being a contrarian and that type of investing, and you said that you should be careful not to be too contrarian. So my question is, when is it too much?
Well, I guess what I was really meaning was contrarian for contrarian's sake, because frequently you can have a market or a sector or a stock that goes down sharply, and a contrarian naturally looks at that. The mistake is to assume that every time something is out of favor and cheap, to assume that it's a good buy, which of course sometimes it isn't, because sometimes there's very, very good reasons why something is cheap.
We talked the other month about gold stocks, which are very cheap. Are they something that we should be looking at, though?
Oh, I think so, definitely. I mean, the timing is uncertain. So the timing is unclear. But in terms of valuation or price, you're looking at prices on gold stocks that are back where they were in 2001, and you're looking at valuations that are very close, that are in the bottom quartile and are very close to those 20-year lows. When you consider that gold has gone from 250 to 1300, we should not be having the same stock prices today. Now, that's a huge question, because some of it reflects what the mining companies have done wrong and destroyed value over that time. But nonetheless, yes, I think the gold stocks are very, very cheap right now.
You're also talking about the importance of knowing when to jump in, when to stay on the sidelines. For gold stocks, how does the opportunity look right now? How long do you have to get in?
Yeah, that's a good question. I think if we start at the juniors, when you think that some of these stocks, the exploration stocks in particular, some of these stocks have been basically down all year, and when you think that the broad stock market has delivered some gains, I suspect we're going to see some more heavy tax loss selling in the juniors in particular. So I would draw up a shopping list, and I would look for opportunities at the end of November, beginning of December, which is normally when the tax loss selling peaks. Because prices can come off 20% just in that short period, and then they can recover 20% in the month ahead. So that's the time, I think, to be looking at those. As for the seniors, the seniors tend to respond very quickly to a move up in gold. We just don't know when that's going to happen. So I'm just accumulating the gold stocks, when they're cheap, and we're positioned for when that market turns.
Okay, are there any other investment strategies you think investors should be looking at in this environment?
Well, investment strategies, certainly. I mean, one thing we're doing a lot of is selling puts. If you sell a put on a stock, you sell an under the market, out of the money put, you generate income, and you sell puts on stocks that you wouldn't mind buying, and if they are put to you, they're put to you at a lower price. But in the meantime, you're collecting income. And I think that's a very, very good strategy for a market like this. When things are cheap, They've been volatile. Volatility is a friend if you're selling puts, because with volatility you get a higher premium. And yet, because we're not certain of the timing, maybe that's a better approach than just jumping in and buying.
Can you share where you've seen the most success investing this year? Could be a strategy again, or however you want to answer that.
Yeah, that's an interesting question. We've certainly had huge success. We've had some failures, don't get me wrong.
Sure.
I think the two big successes we've had this year, and there's a lesson in each. One is Nevson, which has now been taken over by Chinese companies, Injin, at a hefty premium. And I think the lesson with that was we bought that when it was the project, when it was originally Reservoir. Reservoir was taken over by Nevson, and we held on. A lot of people sort of gave up with Nevson. The lesson there is that when you have a really good asset, which Timok is, a really good asset, and it's valued in the market cheaply, you just hold on, because eventually something good will happen. The other one that's been very good to us this year is Evrim Resources. Evrim is a prospect generator, and all of last year the stock price was 18 cents to 25 cents, 20 cents, whatever. All year just up and down in that low range. And then in April they had some spectacular trench results, and the stock now is at about $1.35. Now, of course, I had no idea that they were going to have good trench results. Nor did Dave, by the way. I had no idea they were going to have good results at that particular project. Nor did they. But the point is, if you buy a good company with good management, with a good balance sheet, you just have to have the patience to wait until something happens. But I emphasize good people and good balance sheet.
Okay, final words of advice for investors heading into the end of the year.
Again, don't panic when you see prices go down at the end of a year, particularly in the junior stocks. There'll be some tax loss selling, I'm sure, but use that to your advantage. And I'm buying.
Okay, well, that's good to hear. That's all from me. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Adrian Day.